Good afternoon, everyone. It is Tuesday, July 15th, 2025. Do we finally have a pullback coming as yields cross 5% on the 30-year? We'll talk about that, and we'll talk about what we're looking at going into tomorrow here. But nice gap and crap here on the spiders, although the Qs held up fairly well. First, before we get in the video, though, if you do like the content, please give me a thumbs up, comment your thoughts, subscribe to the channel as well. Also, come find me on carnivoretrades.com for swing trading alerts analysis and our live day trading room, which actually first red day in a while there today, but we have been on a hot streak for quite some time. And today, markets with a pretty good gap and crap, and we finished it off. It was a full on gap and crap. Sometimes you get these fake outs. There was one, I believe, not that long ago. Yeah, I think it was this one on the 12th where we gapped up and we had a little test in the morning, and it was kind of like a rug pull on anybody who was shorting for that gap fill. You should have known we weren't going to go down though with the gap above those moving averages. That's too strong. But nonetheless, we did follow through to the downside. Now, a couple of things before we get into the downside possibilities here. Volume on the spiders very light. So I mean that's not sell-off volume to me. That's not heavy volume, not distribution volume. And we didn't even close below yesterday's low. So it's not like this was a complete, horrible negation here. That said, breadth was pretty poor. Nvidia, if Nvidia was down, this market would have been down a lot more. So we had basically 90% down day. And the Qs, managed to close up 51 cents, but definitely got rejected off 560. Now, I think a lot of this was more related to the call wall at 6,300 than anything. So again, you can kind of just see we gapped right into that. If we had gapped above it, with a huge amount of conviction, yeah, then it could have just accelerated. But we gapped into it, and we gapped into 560, like I said, on QQQ, like pretty much right on the money. So that was just kind of, just dealers not buying that. So they're just not going to buy it anymore. It's already to the hedge, so it doesn't need to be bought up, and there's nobody left to buy, so it comes back down. So the markets did take a little dip here, and we saw the Russell, and I was a little surprised here. I thought, now this wasn't engulfing, unlike the spiders, and you did have a little uptick in volume here, and it's a little surprising because the risk reward here, positioning wise, is saying that the Russell is the best, but we had that chip news in the overnight with Nvidia, and I think just the dispersion of it just kind of kept the Qs higher. You can even see the VIX here only up 15 cents. VIX futures were down, so you still had the short end of the VIX curve down. VVIX here down as well. Tomorrow things can open up though, so dealers, if we do have more macro triggers and things of that nature, maybe PPI, I don't know, we got that House vote tomorrow afternoon, that could set up more of a pullback. So dealers will not really, they're not going to save the market here, and we are seeing some problems of tomorrow, especially depending on if this converts to OI, which it looks like it's gonna. There's definitely some risk on these spiders here for some downside. Obviously, and that's just for tomorrow. For Friday, last I checked, we're still pretty positively hedged into Friday. So you can see, it's pretty positive for the most part. They're going to buy this up. They're going to buy dips, but again, this is 2 days away, 3 days away, and ODTE is much more dominant than any other expiration. So if we start to see downside before then, that could change the way that those hedges, get pushed out in the future. So don't count on those future expiries too much. Tomorrow's is a little bit more important. I'm not going to give those exact strikes away that we're looking at, but there's definitely one in particular that is of interest. But just suffice to say right now, if we break 620 on the spiders, we could see some more downside. In fact, 6250 was breached, obviously. I tweeted about that. And we just breached it at the last 10 minutes of the day, and that's where we started to accelerate. So that's an area that we'll be watching. And then there's obviously the 6200. Obvious level here, 6150. I mean, anybody with two eyes can see that, right? That is right there. And then, of course, you got the whole round numbers of 61, 60, 60, 60, 50. 6,000 area. That's if we even get down there. We're entertaining this right now like it's a confirmed thing, but just remember it's OPEX week, right? These things happen. We get whipsaw, but we do have some catalysts. We got that House vote. We got PPI. Core CPI came down, but bonds, like I said, could not get a bid no matter what, regardless. And TLT held the 85 handle barely. It held. It's not much of a win there. But my lotto play did work out. That was the dollar index. We talked about that, and yeah, nice little squeeze there. You got the 50 MA, 99 handle coming up. So we'll see if that can get going. The 50 MA has been resistance the whole way down, but if it can get through that, it can go a heck of a lot higher. And the concern right now, obviously, from the street is that 5% 30-year. But just remember here, it's a concern if it goes up quickly. If it just marches higher, I don't think it'll be a problem for the market. And why would you say that, Aaron? It reprices everything. Everything gets risk because we're in fiscal dominance. So you can look here at the 30-year, and just look at the last couple of years, right? So yeah, you had an obvious inverse correlation for a while. This was causing problems, but as soon as we started to get into fiscal dominance, it's pretty much right on the money here. Let me just remove these because it's going to make a mess here. But we'll go back 2 years again so we can look at it properly since I messed up the chart. But yeah, there we go. Since the late 2023, it's just pretty much positively correlated. You have a few dips and rips here and there, but it's pretty positive. In fact, we actually bottomed on the same day earlier this year. So it's not as if that's not a thing. So just be aware of that. And, they are doing QE quite literally right now. So there's that too. But that doesn't mean we can't pull back. So right now, if you're asking me, am I bearish or bullish? I'm neutral. I don't really have alpha as far as which ways it's going to go. I could see it going both ways. There is a window of weakness now that's starting to open up. But, if a lot of people are front running it, which I think they might have been doing here today, we can just get to another critical mass of shorts in the market, and then we squeeze back up. So could go either way, and I've just been kind of raising cash on as the more we pumped here, and it's worked out really well. So we'll see what happens here, but I would just caution if we do start to see downside, don't get in front of it just right away. So that would be my thoughts on the matter. The Qs here, 550 would be a level to watch on the downside at before 540. So those are gamma levels. IWM did break 220, so that is a little bit of a problem. So that may want to go down and test that 215. Dow here broke through that pennant. So that's not resolving to the upside. And a good move down there. SMH here, maybe a little bit of a, I won't call it NVIDIA could be a hanging man. But it's, it could be an evening star if we do reverse down. Possible island. Right, so just be careful with those. IGV down just 6 cents, so that actually was okay today. Transport's down as well. XHB down 3.5. Not liking the rates. VNQ held up. It did finish off the lows. And IYR right into that trend line again. It's just coiled here. It's ready for a move. We'll see if it goes up or down. That's the thing about knowing when you're coiled. A move's coming. It doesn't tell you which way it's going to go. But if it can break through this, it can go a heck of a lot higher. Anyway, XLF here has some bank earnings, mostly pretty good, but a little bit of a sell to news there for XLF. I think JPM. The JPM hung in there okay though. That's obviously the big one. KRE outside moved down again. Remember I said yesterday I would prefer it if the 20 MA was caught up the price for that flag. You definitely have some volume there behind that, and again those rates hurt these banks, these smaller banks here, because they have to hold that long-term debt that it's just killing their balance sheet right now. Broker dealers down 1.1. Oil here down 32 cents. Nothing really doing there. XLE was down today, but wasn't the end of the world there for that. And then OP and OIH, same thing again. 250 still a problem there. We talked about the dollar, gold here. Get rid of these day trading lines here, and yeah, it's hanging in there. I'll just say this right now. I don't think GLD goes much through 305, unless it's got a small chance to go through it tomorrow. And if it does with conviction, and it can go back to maybe like towards 300. But I think 305 is probably it for GLD right now. So I think this will stay supported. But kind of a quiet day for gold here, relatively speaking. Silver took a little bit of a dip as well, but not the end of the world. You know, kind of just like getting close to these hourly, you know, like the 4-hour kind of zone there. Maybe there's a fib here. See if there's like maybe a day trading level on this tomorrow. Yeah, 618 at 37, and then the 50% fib right here at 37.50. So we'll see what happens with that. Been day trading a lot of gold and silver lately with some pretty good success actually. So platinum kind of quiet, palladium quiet too. They held up. Copper got a bid towards the end of the day too, but this needs to consolidate if it's going to try and go higher. But don't worry, guys. There's no inflation. Because copper's almost $6 a pound or an ounce, whatever. All right, and then lastly, Bitcoin here. Again, we warned about this. Pretty good outside move there. So that tail candle is confirmed. And again, you know, people can, you know, I know some people don't believe it, but it's true. The options market matters with Bitcoin now, and Bitcoin is now fully under the control of Larry Fink. So, you know, I hate to break it to you, but IBIT, I said this on Friday, that we're probably not going to close the week above 67, and if we do, it's by like 2 pennies. So I don't think Bitcoin's going to go much past that this week. I'm not saying it's going to crash, but I don't think it's, I just, you know, that gap up yesterday was an easy FOMO sell or a mean reversion here. So 110 is still pretty good support here, you know, if we were to retrace to that. Nice. Now Ethereum's different. Ethereum still has upside, and that, in fact, Ethereum actually, I think can go to 32, maybe 32.50. Actually, just for ETH, yeah. So whatever 24.50 is to 25, I think that's where ETH can go this week. But Bitcoin's different. Everybody's talking about, oh, the altcoin, this and that. I think it's just the options market. But we'll see if that continues next week, though. But anyway, yeah, market's done a pretty good sell here. Spider's down, yeah, down a little bit in the after hours too. So good. Hopefully we can get a little bit more selling. You know, it needs to happen. It'd be nice to see a little bit of a pullback here. But yeah, right now market's definitely coming back in, and this will make for some good trades, hopefully. Do I think we're going to go significantly lower? Probably not, unless we get a huge problem. But we'll see if this does start more of a fall pullback, or if it just is it could be a flash in the pan too. Again, we don't really have confirmation here of any sort of major downside just yet. We can get that tomorrow with follow through though, and if we breach some certain levels. But anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. I'll see you guys all tomorrow.